Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Today we have important change on the larger time frame as the weekly one-time framing lower has been stopped after 5 weeks. The market is at a key area as we reach the halfback of the May's range, and this is a very key decision point moving forward. On the daily, we saw another push upwards, another session of continuation with the last gap left on the way down, which is this one that I have marked in red, also closed now. Zooming into the market profile, we see how value was established almost entirely higher. However, there are some data points that are very interesting to comment. The extent of this week's move is reasonable considering how short the market was at the end of last week. And we covered this early in the week in our briefings. Tuesday and Wednesday saw very strong closes, validated swiftly on the next session. You see that it closed at the top, then close at the top, and then today follow and move higher. Now, today, there were a tremendous amount of hesitation in the market. You see that there was a lot of back and forth, and it was towards the end that we had that late push. This hesitation is in line with a pre-non-farm payrolls market, especially after moving that much upwards. But what is not in line, what is strange, is the extent of the late move. Having this after a normal pre-non-farm payrolls quiet day, having this type of move just before the non-farm payrolls, especially having a very questionable low, that's something that requires attention. At some point towards the close of the session, we had three distributions. The top two were merged, were closed, but that's a sign of emotional buying. And what concerns me is that all this happening at the top of a rally. It's not normal that on a supposedly quiet day, when the market should be waiting for data, you have a very questionable low. Then you have a lot of trial and fail, which you have a weak launching ground. You cannot get the job, and then suddenly you have emotional buying. That is not right. That shows that the risk to the upside has increased dramatically. But at the end of the day, we take what the market gives us, and the fact is that we had an extension higher, so we carry forward these data points and we keep it in mind. So the immediate focus is on value developing relative to the upper distribution, which is this one that we have over here. Let me expand that a little bit. If we close the distribution and create acceptance below, that will denote change and increases the odds that the rally is fading and finding balance, probably somewhere in this area. Now, if we continue upwards, we find value within or above that obviously has good odds for continuation, but we need to carry forward the way this happened. This is an important clue, I think, moving forward. But remember, tomorrow is a big risk event, non-farm payrolls. The market is a little bit confused. We're not clear if good news is good news or we're back to the good news is bad news, because the market is expecting the Fed to cut rates, is pricing cut rates, and there's just a whole debate about the inflation and the state of the economy. So anything, and I mean this literally, anything can happen tomorrow. And remember, odds are just odds. So monitor your data, do your analysis, and be patient. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.